So, you're new to trading and you're not sure about the indicators and which ones you want to use. Here's my advice to you: keep it simple and start here. Go to the little beaker, whatever the heck that thing is, and you type in P R E, and you do this one, shared previous OHLC. Double click that, and then you do pre high low. Okay? Then we go into settings here, and we go to, this is for previous high, this is yesterday's high. So I like to do this one yellow, for yesterday, yellow, and then I do the dash lines here, and the low, I do yellow, and I do solid. And then previous close, I like to do pink. Okay, and I make this a little thicker. This one, I uncheck these three boxes. Go OK. And then this one is pre-market data. So we're going to make this solid line here. And then we'll do this one here. And yeah, keep that. And then I like to do orange. That's the overnight high, which is pre-market. And then overnight low, pre-market low is we do solid line. This one and, oops, orange. Okay, and then we uncheck these. All these. I honestly don't know what these ones do, but I know that I just want pre-market data for this indicator. So this is technically two indicators, but you get more than two indicators in these two, so it's pretty cool. Now, so if you were just to have these indicators, in my opinion, you would be able to, these would be like good for, just even if you were to just blindly follow trades just based off of these indicators, you would do, in my opinion, you'd have a chance at doing well. But these would also be good for swing trading. So what these tell us are, this orange one's a pre-market high, pre-market low. This gray is pre-market. This is after hours right here. So this is yesterday. This is pre-market yesterday, market hours, after hours. Pre-market, market day, after hours. So tomorrow, this is what we're going to see. Tomorrow the chart's going to be over here. And this is BABA, and we're going to see this yellow line when we're over here is going to mean it's going to show us the low of yesterday, and this is the high of yesterday. This is the close. So tomorrow, if the price action's up here, these orange lines are going to be different. Whatever the pre-market is going to be the high and the low of the day. Well, if the price action's above this pink line, that's a bullish sign. So that can give us an idea of where the stock was. We know where the stock was, and we can kind of gauge where it might be going. Excuse me, if the price is floating around here tomorrow, and then it starts making its way above the yesterday's highs, which is this yellow line, tomorrow, then, and it's already above the whatever the pre-market high is at tomorrow. So there's a couple different things. If the price action went down low here and it tomorrow and it bounced off the yesterday's lows, which would be this yellow line, then that could be a long there. If it breaks below it, it could be a short. That's one potential long or short. There's previous day close. If it breaks above yesterday's close, let's say pre-market is down here, it gets above yesterday's close, that could be a long. Yesterday's highs can be along. These can be entries and targets, but they can also be entries in ads or entries in just take profits, entries and just keep your position open. It just kind of give you an idea of where the stock is, where it was, where it might be going. So a lot of times, it's very bullish if a stock, is above yesterday's highs. So this is a really good indicator to help you. So we have the pre-market high, pre-market low, yesterday's close, yesterday's lows, yesterday's highs. So my first 6 or 8 months of trading, I wasn't in my mind when I would trade. I would kind of have no idea where the stock had been, where it might be going, because I didn't uh, have a clear understanding of what this data was. So to me, it's very important to have this data, and I hope that it can help you in your trading. If you're new, these are the first indicators I would start with. Even before the EMAs, like I like to use the 9 EMA, the 21, the 34, 89, and the 200 SMA. Now, the and also to elaborate on that, the 9 EMA I use for momentum, like for short-term trading. Like a lot of times, if a stock gets extended off the 8 EMA, which the EMA would be running like about here probably, real close to the price action. If it gets real extended off it, like right here, this is extended off the 8 because the 8's probably going like this. It's real close. Then this would be an area where I might want to short a quick scalp. Take a short and then add right here when it dropped back to the 8. I'm sure that's where it was. Like here, we can quickly put it up. EXP. EMA's exponential moving average, and we'll make this an 8, and we'll color it this little reddish. Let's see how right it was. Yeah, so, well, I was a little off. So this is a 5 minute, so I was thinking we were on a 1 minute. So yeah, so that's an 8. Yeah, look, I thought it was a little bit. See, like here it was extended, so it gets real extended like that. It's a good area to short. In my opinion, is a lot of times the price action will get just above the highs and then like almost like a false breakout. Break back down and scare people off. Take out stop losses. If you don't understand what that is, stay tuned to my channel. I'll get into more detail about it. But it's something that you'll eventually learn. You'll have to because it'll happen to you, and it's very valuable information. But my best advice would be to definitely know your pre-market levels, your yesterday's levels, and so you know where the stock might be going. And this can really help you. Like I said, even if you don't have any of these other indicators, the EMAs, SMAs, I don't even use like MACD and RSI and stuff like that because, in all honesty, to me, it just confuses me and it's just too much information for me to take on in at one time. So, generally, I just like the previous day levels and then some EMAs, and that's about it. And I know some really good traders that literally only trade with yesterday's close. Like they're able to see because they'll pull up. This one guy I know is a really good trader. He pulls up a chart and he zooms out a lot, so he knows yesterday's levels and today's levels. So he knows yesterday's lows, yesterday's highs, yesterday's close. So he doesn't need those there. That's one way you can do it. But if you're starting out, it's nice to have these levels. Like me, for example, I like to. I use Lightspeed as my trader, but so I use ThinkOrSwim for my option stuff sometimes. But I like to have multiple time frames. 1 minute, 5 minute, 15, 4 hour, and daily. But I don't always have these time frames open. Like in my Lightspeed browser, I have 1 minute, 5 minute, daily for most of my strategies. I have 2 strategies right now. I started off, I didn't have an edge, strategy, whatever you want to call it, for the first 10 months of trading. But one day, I had an aha moment. A light bulb went off, and my first strategy clicked. That first strategy was trading breakout patterns like pennants, bull flags, wedges, triangles, trading off of UVXY and SPY. Now, UVXY is a derivative of the VIX, which is like a volatility meter, and UVXY can be traded. The VIX can be traded. Um, Sometimes I actually just trade UVXY when it gets real extended off the AMA. I will short it. I'll go long if it gets extended to the downside off it. But my first strategy was that I learned from a guy named the Kang. Uh, he's a moderator on this chat room that I'm still a member of. But anyways, he taught me that to use UVXY. So I will if UVXY is going like that, and I'm gauging, okay, UVXY keeps bouncing off this level. When it breaks that, that means the whatever like if a lot of tickers follow UVXY, like BA, SPY, Amazon, sometimes Tesla, Apple, certain mega caps do. But so if UVXY breaks to the downside, then the SPY and a lot of these stocks that follow trade inverse to the UVXY will, um, if UVXY is breaking down, they will be breaking up. So 840 or 845. So in this case, SPY and UVXY were trading in the same direction at times, and that's not very common, but it does happen. So when stuff like that happens, you know there's going to be a correction, and they're going to go back to trading inverse. So that's something that you want to keep note of if you are trading that. But so yeah, I would trade consolidation breakouts with volume. And if you're not understanding this, come back to this video when you do understand more about these terms and this type of strategy. But need volume, and they break out consolidation. Whenever there's consolidation, that's like pressure building up, like a pressure cooker, and that's very important to realize that when there's tight price action, then there's going to be a big move, and that's helped me a lot. But my second strategy, which my first strategy, I have like maybe a 56% win rate, so it's not the greatest. And a lot of times, the trades work out, and the patterns validate and all that, but I can't handle the swings in price action sometimes. Like I get shaken off a trade. Well, since I started my second strategy, which is shorting at daily resistance levels, or when a price gets to pre-market high and it doesn't break out, then I go short. If I see weakness, and if there's an extension off the AEMA. Or it breaks yesterday's lows or pre-market lows, I like to trade to the short side a lot now. My win rate with that second strategy is 72.8% last I checked, which is fairly good in my opinion. So, I've been really good about limiting my losses. So, my wins aren't very big. I have between an average of probably like $175 a day. With my shorting strategy, but my losers are usually those days are usually break even or down $100. I mean, once I'm down like 100, and it's just if I'm not feeling the price action, or I'm making mistakes, and I just kind of just call it a day and let it be, and then come back the next day and have a green day usually. So it's great when you get to a point where you have one edge, and then you get another one down, and then you have enough data to where your win rates. You have confidence and conviction when you place your bets, so to speak. And I've been trading just over a year, and I'm still my sizing is not where it will be, in a year from now, I could say. Uh, I started off. I made the mistake of going big at first. I was buying 1,000 shares of, a $30 stock or an $80 stock. I mean, I would, be trading on house money, on a margin account, and that's just foolish in a lot of cases. So, I would just get in a trade, and then I'd be like, all full of anxiety, like, oh, it's red. Oh, the second price went against me, I would just get out. I'd be like $500 down or $1,200 down and get out. There was like no method to the madness. Uh, so over time, I lost several $1,000s trying to just make money. I just want to make money. Well, I eventually learned I had to come up with some strategies first and get them down pat. So I immediately, after a while, I just said, I'm sizing down. I sized down to like one. I would do like one share of Tesla or one share of Amazon or 25 shares of Apple when it was like 350, $300 or whatever. Um, Now I'm at. I'll do. I'll start with like 100 or 200 shares of like a $25 stock, and then I'll add again, and I'll add again. So I'll have 400 to 600 shares, at the most, of a $25 stock. If something's like $50 or $100, I'll do 100 shares, 50 or 100 shares to start. It just depends on the price action, how fast it's moving. The main thing is I don't want to be, get shaken off out of my position, uh, because price action can move around a lot. You got to be able to, in my opinion, you got to be able to, take some red in your account. Ultimately for your plan to work. Uh, that's what the market does. It goes and takes stop losses and just, tests your patience and your guts, so to speak. And if you're able to hang and you got a good strategy and the trade's, still valid, then, if you're able to stomach through that, then you can come out ahead a lot. So I've gotten a lot better at, holding my positions and, seeing my strategies out, and it's really showing in my P&L and L and in my attitude and everything. So even with just over a year, I've seen a lot more consistency now that I've solidified two edges and continue to work on them and just get my data, go over my data every day. I journal every day. I take screenshots of my trades. I have all these screenshots, different trades. Like here's one here. I mean, this isn't a trade I'm proud of or whatever, but I got in here, exit. That was a loss, but let's see. There's another one. Short cover, short cover, short cover. So 2 winners, 1 loser. And I have short cover, cover. See, today the price action, in my opinion, was weak, and not in a good way. Not weak to the downside, just very slow. The volume wasn't there today on a lot of stuff. So at least the stuff I was on. So normally I would have added here, and then added here a little bit too soon, and added here a couple times. Just to get my average up, so that when it drops, I make a lot more money. Uh, but yeah, I mean, I'm still here to fight another day, and just learning from my mistakes every day. Like here's the long I got out way too soon. Um, Short cover. Yeah, he's like, there's one, this one, what's it about? There's a short, cover. I need to work on my patience though. If and pretty soon I'll be at a point where I can, I'll be going 400 shares and then 400, and then if it goes a little higher, 800, and then 600, and then the remainder let some ride and let some ride and boom, take some profits down here. That's the level I'm trying to get to, and I will be getting there. Just keep doing what I'm doing and practice patience, and I will come out ahead. So I hope this video helps at least one person out there, but I'd love to help as many people as possible. I was, new to ThinkOrSwim and new to trading in general, a year ago, and videos like this one helped me a lot, and I'm here today because of them. So, like I said, I hope you enjoyed this, and I hope you have a wonderful day.